Welcome, everybody, to the Planet MicroCap podcast, Canada Virtual Edition. I'm very excited about our panel that we have for you all today. This is going to be, we're going to be talking some serious Canadian shop. All right. And usually my background, I say it's LA. Today this is Banff, with a palm tree or something. But, all bad jokes aside, I'm really excited for y'all to be joining us today. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And let me introduce you to our incredible panel that has been so kind to join us today and share their insights and thoughts. So I'm going to go, we're going to go, I guess that's counterclockwise. So to my immediate left right here, we have Mathieu Martin. He is the, correct me if I'm wrong, the sleep-deprived external consultant for Rivemont and blogueur for East-based MicroCaps. Sorry, I'm stealing every one of Jason Hirschman's jokes right now so that I can spare everybody, But Mathieu, thank you so much for joining us today.
Yeah, thanks, Bobby, for the invitation. And you got it right. I'm the sleep-deprived consultant, exactly.
It's because he has a 6-month-old, okay, everybody? It's not because he's up burning the midnight oil looking at microcaps, but he might be doing that too. We don't know. We'll find out shortly. And then also joining us as well is Jason Hirschman from Hudson 215 Capital. Not 215, 215. All right.
215, just like Interstate 215 around Las Vegas, Bobby.
That's right. See, that's how you know when somebody's not a Las Vegas local. If they say, oh, yeah, I'm on the 215, no. The locals say 215. It's just like in LA, we say the 405. If someone said 405, they're not.
Yeah. Send them back to Illinois or wherever they came from then.
Actually, how we know is if they say the 405. If they just say the see, I can't even say without saying the 405. They say I can't say. Anyways, all right, moving on. We got also joining us right now is Dean Trottier. He is blogger, Twitter raconteur, and probably can, I think, squat all of us collectively combined right now. What's up, Dean? Thank you for joining us today.
Thanks for having me, Bobby.
It's great to have you, man. And then also joining us, I know she's going to be so embarrassed by me saying this, but I'm going to say it anyway. The legend herself, she had a brief hiatus of joining me on a show. It's been 4 years, and now she's back to just share all of her incredible insights and wisdom about investing and everything. So joining us again, Meredith Brill, private investor at Lock, Stock, Barrel on Twitter. Meredith, thank you for joining us today.
Thank you so much for having me again, Bobby.
It's great to have. It's great to have you. All right. So, every one of you have been on one, whether it's the Planet MicroCap podcast or one of our shows or spoke at one of our events. So, we're not going to, do our typical background, where your passion for investing gets started. But I really wanted to just kind of dig in here and save people from even more razzle dazzle that, we like to do here to start off these shows. So I want to start off with the question of, for the Canadian locals on here, and do you make an active choice to invest in Canadian microcaps, or did you find some sort of inefficiency? So we're going to start off with Mathieu, and then we're going to go to Dean.
Yeah, sure. So, for me, it's always been more, it always felt more natural to invest in my home country. I think there are a few advantages. So I can have better access to companies. If I want to go visit a company, head office or a manufacturing plant, I can just take my car and drive. If it's in Quebec, my own province. And also there's the language. In Quebec here, people speak French. So I think there's an advantage there that can be gained. Also, just from a regulation standpoint and accounting standards and all that stuff, I think I feel more comfortable in investing here in Canada. So that's the main reason why I got started here. And also one thing I should mention is that the Canadian market is very focused on natural resources. So most of the stocks listed here are mining and oil and gas. So when you the ecosystem is built around that. The brokers, the investors, they are knowledgeable in these areas, and not so much in like technology or consumer goods or all that, these other industries. So when you dig and you try to find good little companies that are growing with like a real product and real business, I think you can find inefficiencies, and so that's also what attracted me to the Canadian microcap space.
Very good. And Dean, how about you?
Yeah, very similar. Just kind of started in Canada, as so much of the due diligence process is kind of going to where the work is happening or the product's being made or the service is being sold. So you start where you're familiar. I have tracked my performance based on whether the company is based in Canada or the United States. And so I'm not exclusively Canada, but I definitely have a better track record of picking Canadian companies. So it's just sort of further reinforced what Mathieu is saying about sort of the cultural and the ease of access to information that's really relevant for these small companies. And yeah, the ecosystem is really focused on, like, it's either banks, base metals, precious metals, or oil and gas here in Canada. These small, quick growing companies are an exception for sure.
Gotcha. Now, Meredith is also a Canadian local, but before I get to her answer on this, I wanted to bring in our U.S. representative for the Canada Virtual Edition here. So, I mean, Jason, how did you find yourself investing in Canadian microcaps?
Well, Bobby, I made one of the cardinal investing sins, okay? When someone you respect pitches you a stock, shut up and let them talk. You know, in 2012, a friend of mine told me about a Canadian software roll-up called Constellation Software. And immediately I was like, did you see what happened to Nortel Networks? Are you seeing what's going on with RIM? I told him, and I thought this was brilliant at the time. I said, you know, as Charlie Munger might say, if you mix poutine with turds, they're still turds, right? Well, I learned my lesson. I own CSU now. So when I joined MicroCap Club in 2014, I promised myself I would keep an open mind to every strange microcap from Canada, right? Pivoting from insecticide to iron pills, open mind, right? Lending money to canola farmers, open mind, right? Plastic film for car enthusiasts with 5 Ferraris, 3 ex-wives, and homes in Istanbul, Gstaad, and Malibu, open mind, right? As an American, you don't have home field advantage in Canada, but you also don't suffer from home team bias, right? There's no pressure to round out a portfolio with oil sands, stocks, go crazy for Canadian cannabis plays. You have the luxury of picking and choosing the select Canadian microcaps that serve your portfolio. So be that super choosy American.
Wait, Jason, really quick, I got to follow up. Is that what the quote that's on your Munger beautiful painting that Sean Eddings did for you? Or
No, actually,
it doesn't say. Wait, I think you got to send it back and say, Sean. I think you got to say, Sean, poutine with turds is still turds. Like,
yeah.
on.
I think that would, you know, it's not as. My quote is catchy, but I think this is a little classier. And thank you very much, Sean Eddings. I really appreciate it.
Oh, it's such a cool gift. Such a cool gift. All right. So Meredith, as our to round us out as part of our Canadian locals on here, I want to follow up based on everything that everyone said here. You know, what would you say for you are the benefits to investing on the Canadian exchange for a Canadian investor?
So when I started out, I really did have a home bias and I wanted to stay in Canada mostly. I think the main benefits for me are that I have the greatest access to management, just like Mathieu said. So you can get in your car, go to headquarters, and sit down with the CEO, but not only sit down with him, ask to meet other management, and get the vibe of the headquarter office. So I think that's extremely valuable to me. Not in COVID times, they're not going to do that in COVID times, but in normal times you can do that. Also, I love going to annual general meetings and if it's in your city, it's very easy to do. And most people don't really know this, but you can ask management all sorts of questions. And most interestingly is to see the other shareholders that attend. So I have gone to annual general meetings where it's just me and management, and I'm literally the only person sitting there. So you have access to management, you have access to the board members. It's really interesting for that. But in cases where you do meet other investors, it's even better, I think, because then you can network and share due diligence. So I think it's really, really valuable for that. And the other thing is that if it's listed on a Canadian exchange, then me as a private investor, I can put it in any account. So that means registered accounts and unregistered accounts. If I'm really interested in a stock that trades just on the US OTC market, then I'm really limited in where I can put it, only unregistered accounts. So that, if I'm going to put a lot of time and effort into researching a company, then it's better if I can put it all across my accounts. And, the other obvious thing is that I can stay in my local currency and not take on currency risk. But a lot of the unique companies in Canada do have global business exposure. So that's great. I get to stay in Canadian currency and get the global exposure.
Very good. By the way, Meredith, I wonder where Jason was talking about the person who told him about this this idea of roll up. I'm sure I wonder where we'll find that out, at some point. but Meredith, coming right back to you, go to my next question here is, and that's, all right. So we've established that each of you have found interesting opportunities that have been both very beneficial. And in Dean's case, he's the master of holding losers. I don't know where that came from, but I joke. That was a joke. I promise.
Yeah,
for sure. So Meredith, come right back to you. What would then you say is your investing strategy?
Yeah. So because Canada, as Mathieu said, is so thematic. So you've got mining, you've got energy, then it was blockchain, then it was marijuana, and now it's psychedelics. So, Canada really has some interesting microcaps that do not slot neatly into any of those themes. And I think oftentimes they get ignored. And so you have an opportunity to look at them if they don't, go with anybody's themes. So I kind of have two buckets that I look at. So the first one is, like everybody says this, but high quality growth companies, but with unique assets so that are difficult to replicate. So examples of this could be leaders in the space where they have idiosyncratic business models, and I would use the Constellation software as an example of that. So when Constellation Software started in 2006, it was a $350 million market cap, and now it's a $35 billion market cap. So, and they just do things completely differently from everybody in rolling up vertical market software, little companies, then applying best practices, and then never selling. So that's sort of their business model that they just sort of invented. So, and I do own shares in that. So the other one is intellectual property heavy companies, because I am a patent lawyer as well. So in that case, if they offer a superior product or service that is protected by patents or trademarks, then it makes it, very valuable, I think. And then the other bucket is sort of like these other orphan microcaps that don't really slot in neatly to any of those groups, but and there's might be a special situation there that is misunderstood. So sometimes you get temporary overhangs, like a lawsuit or a business disruption. But if you can take the time to assess that problem, and you're comfortable with the fact that they will resolve at some point, then you can take a position in the stock when it's out of favor. And so there's other examples where the sector is temporarily out of favor, like a COVID work from home stock that obviously is going to have a business disruption. But if you can have a variant view that it will survive that disruption, then when you buy stock at the depressed price, then you can get that reversion to the mean. And if the underlying business does well after that, you get an extra torque when it does well, if it does well.
Very good. And I think we're going to hear more about this, some of your using your professional background to help assess some stuff. we'll be hearing that in a little bit, everybody. Just stay tuned for that. I think you'll want to listen in on that story from Meredith and Jason. But Dean, same question to you. You know, what would you say is your investing strategy?
I guess it's fluid to best describe it. I definitely don't have the same kind of sort of what's all over Twitter these days is sort of just pay anything for quality type mentality. It's definitely fundamental based. The ability to go and look at anywhere and be overweight in any one stock or sector is a big advantage that I have as a private investor. So if the opportunity is right, you can go heavy into one company or specific corner of the market. And I've done that at times, and I've definitely had more top-down, sort of as Meredith described, where like a COVID has severely impacted a business. It might not be a super strong long-term sort of compounder, if you will, but the temporary overhang of COVID will eventually go away, and the business should return, as well as a reasonable multiple should return to that business once optimism is back. And so that's a little bit more short term, as well as I definitely, when I do find those diamonds in the rough, I'll hang on to them for I think I've held my longest position for 8 or 9 years now, which is almost the entire time that I've been an investor. So yeah, I don't have a specific style, definitely fundamental. Usually I can't say I have any names in the company that tick any of the sort of flashy, super sexy businesses right now. So yeah, hope that answers your question.
That does. Look, I mean, at the end of the day, this question is a very open-ended. There's no right or wrong. I mean, I mean, there's many different ways that you can make money in the market. This happens to be specifically, we're talking about Canadian microcaps and how people are doing it on there. So, the same question, Jason, to you then. What would you say is your investing strategy? And maybe we'll again, as a U.S. representative, what's been your investing strategy when you're considering a potential Canadian microcap investment?
Yeah, my official title at Hudson 215 Capital is managing director, but actually I'm like a combination football general manager and lead scout, right? I'm looking for unrecognized talent, which means I try to buy potentially great businesses on the cheap, right? A misunderstood business model, a top-notch management team that has fallen out of favor, a solid business going through a rough patch, right? And I'm happy to talk about the specifics of what I look for in Canadian, microcaps. But for now, I just also want to add that, honestly, people focus too much, I think, on good investment strategy. I think just as important is avoiding bad disinvesting, aka poor selling, right? One thing I've learned from owning MasterCard straight on from June 2006 to now, which is a 75 bagger, is that developing holding discipline is crucial. In many ways, that's where the real money is made, right? From your holding strategy, not your investing strategy.
Right. And I think we could add to that even then your compounding strategy from there too.
Oh, right? Yeah. I mean, since I'm looking for something special, right? If that prospect, which maybe has a great arm, the equivalent of a great arm, or maybe he has great speed, right? That's what we're looking for, in microcaps. You don't find fully developed businesses. You're just finding something with a glimmer of something different and special, right? As if they are developing that skill, or if they are starting to combine themselves into the entire package, right? You want to hold on to it, right? You really want to take advantage of it, right? If you draft, Tom Brady or whatever in the 6th round, or draft number 99, right? If he's turning into a world-class quarterback, you don't trade him away after the first year, right? You don't trade him away while he's still a microcap. So I really do think there's great benefits to, if you find that special microcap, to just taking a very long multi-year nap and hopefully waking up to a much longer profits.
Wait, so are you telling us that Bill Belichick is actually a great microcap investor, and whoever was GM of the Falcons when he traded Brett Favre after 1 year, he is not a great microcap investor. Is
Probably,
that really what you're trying to say?
Yes, that
Okay.
individual would probably not be well suited for microcap investing.
Fair enough. Okay, good. All right. Just wanted to make sure we were following along.
Yeah, we're
we
on the
had to
same
make sure.
page, Bobby.
Okay. All right. Good. You know, and for our non-US,
You're a Giants fan, right? You're a Giants fan, right?
Yes, and happily during 2007, 2011, and it's
Okay.
been quite a ride since. Let's just put it
Yes.
like that.
Okay. So you know that there's ups and downs to investing. You know ups and downs to your teams, right? And
Listen, as much of a bull market as it's been since like 2008, it's been that much of a bear market since 2011 as a Giants fan. Let's just put it like that. But Mathieu, same question. I want to come to you on this one. You know, what would you say then is your investing strategy?
Yeah, sure. So, well, first of all, I would say I'm a generalist investor. So I don't specialize in specific sectors. Anything that I can understand and that I'm able to put a value on it, I will consider. So like Meredith said in our first bucket, high quality growth names. I think that would be mostly what I'm looking for. And you know, from a quantitative perspective, I look for good attributes like revenue growth, good balance sheet, company that's profitable, high return on equity, all these good attributes that a lot of people look for. But where I think I do things differently is I use these attributes to build a watch list. And then I look at the watch list and I do more qualitative work. So I try to speak with management many times, if possible, before I invest. I talk to other employees. If possible, I try the product or service. I can speak to suppliers or customers. I do more work to really get to know the business inside out compared to other microcap investors, I think. So that's how I think I'm able to make better long-term decisions. And this goes back to Jason's point also to hold for the long term. I think it's easier to hold when you know your positions better than most people.
Got it. And so Mathieu, coming right back to, I have one question that I wrote up that I think I'm going to skip for now because I think we more or less answered at the beginning here, but you touched on a few qualities that you look for in a potential Canadian microcap. I mean, what are some other things that are important to you? You're a fundamentalist you're a fundamental investor. You got to be careful with saying, that, but you're more or less a fundamental investor. Actually, I think all of you are more or less that. You want to just make sure it's at the very least a quality business. So what are some of those qualities that are most important to you?
Yeah, well, there are two main things that I try to assess when I look at a new opportunity. So I want to see a good management team. So that's why I always like to talk to management in the first steps of my research. I want to understand how they think about the business, about the risks, about the opportunities. I want to get a feeling that they think for the long term. And also I want to assess their capital allocation skills. So how they will finance the business, how they will invest the cash flows. So that, I can't say that it's just one thing I look for. It's just an overall assessment that I do of the quality of the management team. And then the second thing that's very important is competitive advantages. So, I don't want to invest in a commodity business. I want to make sure that the business is durable for the long term. So if I'm going to hold it for many years, it has to have strong competitive advantages. So those are the two main things I try to assess early on, and then I will look at the valuation and see if it makes sense. But I would say valuation is like the third criteria.
Very good. And Jason, how about for you? You mentioned a few qualities as well. So what are some of the qualities that are most important to you?
I think maybe it's because Canada has so many commodity plays, but I think, superior distribution doesn't get its due recognition. Like if you dig up gold or grow wheat, the distribution system is established, right? You don't have to convince anyone to take your gold at the market price. But if you're a non-commodity stock in Canada, I think we get a lot of razzle dazzle from microcap management teams about some new product, some new service, but really, it could be, you hear a lot of SaaS talk, right? But it's software. What matters is the selling, right? You got to sell it. It's not a suggestion, right? So, for me, for any given niche or product or service, I'll take a world-class sales and marketing team over a superior product any day of the week and twice on Boxing Day. That's my little Canada reference there. So I think that's like number one. Number two, and sorry to say this, but I think Canadian microcap investors, they're really fickle lovers. And even the best also get swept up in concept stocks. And we've all done it. I mean, back in like March, April of like 2017, like Light Access raised 20 million Canadian, right? At 225 a share, based on a few strong quarters and this high-speed internet super cycle enthusiasm. And they upsized it, right? First, they were going to raise 12.6 million. Then they're going to raise 15 million. Then they actually raised 20 million. Meanwhile, Expel, right, offered in February 2017 a private placement for $3 million US at $1.43. And they didn't even get enough subscribers to fill that, right? And so again, like Canadian investors, all microcap investors really, I mean, there's a lot of like ups and downs, what's hot, what's not. And now of course, Expel is like the cat's pajamas, at least according to like Twitter posters. So, a promising story can get you a temporary 5 or even 10 bagger, but it's execution to get you that durable share appreciation. And by the way, I do own Expel shares. I don't own LTE.
And also one other, Constellation. Do you still own Constellation?
Yes, I do. I still own Constellation.
Okay. All right, very good. All right, well, we're going to be getting to the Expel story very shortly. But Dean, for you as well, what are some of the qualities that you look for as well? I know you mentioned a few earlier.
Yeah, nothing that's going to surprise you or anything like that.
What?
I like, I say everyone says high quality management. That is always very hard to sort of tease out through a meeting or two. I sort of build my understanding of a management team over years as I understand the business and see how they think. And you also have to give them the opportunity to make a spectrum of good and poor decisions with the opportunities that present themselves. So a good example of that is during COVID, if it was a business that did not need to lay off any people or furlough any people and maintain the culture of the business, even if that hurt profitability in the short term, that is a sign of a high quality management team, as well as someone that looks for the experience that the customer or the end user is having of their product, whether or not they sell directly to that end user. Understanding that is another, a little trait that you can see. I'm probably the only investor on here that has a couple of small net holdings. So obviously those generally, I have yet to find a super high quality business behind that. Having said that, all of the companies that I've had that have turned out to be multi-baggers have started out with very, very humble beginnings with a lot of either statistically cheap from a balance sheet standpoint and expensive from an income statement standpoint. And so the valuation on some of those businesses is very important. There is a couple of businesses there that Jason referenced. One of those businesses, you're probably taking a lot of risk when you're paying substantially above replacement value of the assets, where the other business, you could pay multiples of any asset value or liquidation value, and you will be fine because it's so high quality. So understanding what the business is, and if you're like me and you're willing to go and invest in less than high quality businesses, you just have to really make sure your valuation is there. And that the balance sheet can withstand a rough patch, because likely if it's statistically cheap, it's already in the midst of a rough patch, and you don't know, I'm not a prognosticator. You don't know how long these things are going to last.
Very good. Very good. All right. So we're now at that point in this panel that I think a lot of our audience have been waiting for. It's story time. And it's also now time to humble brag, everybody. So, we're on this panel discussing how great Canadian microcaps are. So I'd love to hear a bit more about a successful Canadian microcap investment that you made, and really how that changed your life. So, we're going to start off with Meredith. I think you have some little story that you and Jason have been looking at for a few years now, and probably want to talk about and humble brag about, of course. So Meredith, the floor is yours.
Thank you. So when I joined the MicroCap Club back in 2015, there was a lot of chatter about a company called Expel, and they mainly do paint protection film for cars, auto. And I started a small position when I joined. And so it had a main Toronto venture listing. And it did also trade on the OTC, but it was very, very illiquid and it rarely traded there. So I bought a position on the Toronto exchange, which allowed me to put it across all of my accounts, which was very good for me. And then in December 31st, 2015, they were hit by a patent lawsuit by competitor 3M. And the stock cut in half the next day and fell from there. And because I'm a patent lawyer and also a chemical engineer, I used that opportunity to assess the merit, look at the public documents that were available through PACER, and the European Patent Office had also a parallel lawsuit against, challenge against the patent that was being asserted against Expel. And we used that opportunity to assess the merits of the lawsuit, which others, didn't take the time to do. And then we were able to step in and buy the shares at the highly depressed share price when we realized we got comfortable with the threat of the lawsuit.
Gotcha. And then Jason, you wanted to follow up on that as well, because I know that you guys worked closely on this idea.
Yeah, sure. I have to talk about Expel too, and I want to be very public to say that really, the Expel journey really is like 80% Meredith's success, and I'll take credit for 19%. We got to give Ryan and his management team 1% of the success too, but 80% of it goes to Meredith. So, I've been investing since 1995. So my Expel journey started 20 years into my investing career. So in some ways, I'm a bit jealous of friends like Sean, who really achieved life-changing gains before needing to dye their beards, lucky bastard, right? So 20 years of process refinement came together for Expel. I finally learned to team up with smart investors like Meredith rather than lone wolf it, right? I learned to analyze and ask the right questions to management to illuminate the true opportunity, right? I bought in size and didn't stop just because the price doubled from the lows I paid, right? And finally, I held through an almost 18-month period where the stock went nowhere and didn't sell just because it 2x'd or 10x'd or 20x'd from my cost basis, right? And just as helpful is using my personal business experience, right? I had been in patent lawsuits as both a plaintiff and as defendant. I have to admit, I was probably a little bit more reluctant to load up on Expel than Meredith based on the analysis of 3M's patent quality. We came to find out or to analyze is that 3M's PPF patents probably wouldn't have survived a patent validity challenge, right? But for me, it was the combination of 3M's patent validity or invalidity issues and having, which Meredith didn't mention, but really led the charge, having Expel's film actually analyzed and finding it did not violate 3M's patents, which that combination made me think that this tiny microcap listed on the TSX Venture could successfully beat the mighty 3M beyond any reasonable doubt. That was my conclusion. So Meredith and I, just to give you a little background, like we knew the film did not breach 3M's patents on April 13th, 2016. I'd gone by then from like roughly 2,700 shares to about 322,000 shares on the basis of the patent analysis. But from April 13th to November 24th of 2016, I bought, and this is, you only can do this on MicroCap, really, only in Canada, really. I bought 40% of Expel shares that traded on the venture. But honestly, that's like 663,000 out of 1.6 million that traded in that period, right? Only 1.6 million shares traded in that period. So Expel on the NASDAQ now routinely trades 250,000 shares a day, right? The discovery process for MicroCap propels both like price and volume, right? One of the advantages of the lawsuit was that Meredith and I had a year when we were one of the few investors who thought deeply and thoroughly about Expel. And I still believe that we actually have an extra year of Expel understanding compared to other investors. I think this has really helped our conviction to hold. Now, I can talk about Expel for hours, Bobby, but the last thing I'll say for now is that asking management about the nature of the communities where Expel was doing really well opened my eyes, right? People think PPF is for Ferraris and BMWs, but one of Expel's best local markets is a working class Hispanic border city in Texas, right? Lots of install jobs on pickup trucks, new pickup trucks. And to me, that showed the real opportunity for PPF and Expel across the US and really across the world. So I'll stop there, but I'm sure I'll bring up Expel again.
Right. And I just want to be clear. I mean, when you guys did your own, when you wanted to check the validity of the claim that 3M did against Expel, this was all your own independent analysis. This was nothing, that this was all on your own. It was on your own dime. Like you just took that next step.
Yeah, really this was on our own dime, and again, Meredith deserves 80% of the credit, if not more. And and it's a lot of back and forth conversations, and actually talking to university professors, going to different laboratories, because the first laboratory really couldn't get the job done, right? And this film is really, really thin, so like analyzing it isn't the easiest thing to do, right? And it takes months and months and months of work, and really, we could have done all this work just to find out that they did violate it, and that it wasn't going to be a good investment. But fortunately, we found out that really there was a fantastic opportunity here. And Meredith, maybe you have something else to add.
Yeah, I mean, we could have just relied on the validity assessment, but there's two prongs. There's the validity and whether there's infringement. So when we did the testing on the film, we were really trying to understand whether it infringed or not. So that's why when we finally found the lab to reverse engineer it properly, and we could assess the merits of the infringement assessment, then I think that was really a fulsome approach there.
And this is probably the most important question of the entire panel. But Meredith, I mean, did you charge a retainer to every investor that was interested in looking at Expel? I mean, that's really, you're dipping your hand in both pots right there, potentially.
No. So it was a group effort. And I think one of the benefits of networking really with smart investors is that we all have different skill sets. And so if we can combine those skill sets together, I think it's a mosaic with producing a thesis, right? So I did that aspect, Jason did another aspect, other investors helped in understanding the business. So I think it really, it's a group effort. It was a group effort. So it's not just one person, but everybody brings something different to the table, I think, with their skill sets.
Very cool. All right. Well, thank you guys for that. So, now Dean, Mathieu, love to hear about an investment that you did that really changed your life, and it was a Canadian microcap, of course. So Dean, you first.
Okay. I'm going to pick one that didn't change my my financial fortunes, but it sort of reinforced my process. And so the company it's no longer public. It's a little company called IWG Technologies. It's the company I actually used in my application for the MicroCap Club. A quick background is they were trading at a single digit price to free cash flow with a strong balance sheet, and they were probably growing 5 to 10% a year organically. They had recently commercialized a tankless water heater, and they make water treatment products for business jets. They had just gotten to the commercial stage for a tankless water heater, which is just another product in their value chain. But the goal would be to get into sort of the commercial aerospace, which would just be multiples in size of the current business. So I used my operations background. I went to the AGM. I was the only shareholder there. I got management's ear for about an hour. And then while I was at the AGM, I went and toured the facility and leaned very heavily on my work experience, and then was able to sort of tease out what would be the definitive milestones that I would see as an investor looking from the outside of this business to see their success, because it had that, it had the high quality, very critical product. In order to sell anything on an airplane, you have to get all sorts of approvals as far as quality is concerned. So it had the product, and then it had the potential. And so I needed to assess what would be the deliverables I would see in order to see the success. Unfortunately, it actually got taken out by private equity only a little bit, I think only maybe a year and a half or 2 years after I bought shares. So it did limit I guess it did limit me financially from what that could have been, but it did validate my process. It validated the fundamental research aspect of everything, as retail investors in Canada seem to be a little bit more short-term focused and a little bit more thematic, I would say. And it was a neglected business. It also validated the idea of networking and getting onto the MicroCap club and conversing with other investors as well.
Dean, I just can't believe you went to the AGM and you had 4 hours worth of questions. Like, that's incredible onto itself. That's a skill.
Well, you only get so much time, and you only get so much opportunities, and you want to make sure you're very well prepared. You definitely don't want to waste anyone's time. So your questions have to be quite well thought out in order to really understand what you need to understand, especially if it's in a business you don't have any personal experience with going into it.
Right. Well, so is the trick then to ask 10-minute long questions, or is it like, I'm trying to learn here? I mean, I do this for a living, so you got to teach me a couple things.
I guess it depends on what the investment opportunity is. So if you're really struggling to, if I'm looking at a business that I have no previous experience with, I really need to understand the product. I really need to understand potentially the user experience. If it's something that is more of, say, if it's a roll-up strategy or an acquisition strategy, then you really need to get a little bit more understanding of capital allocation, management's experience, and then their viewpoint on shareholders. And then you have to tease out, like, what kind of shareholder base, what's the relationship with the board, all sorts of things like that. And it's also building a relationship, because if these companies, you're not going to be in them for 3 or 6 months, you're going to be there for several years, and you want to build a relationship that you are a strong, committed shareholder. You're willing to hold everyone accountable, but you want to be able to sort of pick up the phone or schedule a meeting or get management's time if something changes with the business, especially if you're going to put a large portion of your portfolio into these things. Like, it's not uncommon to have 15 or 20% positions, especially as they grow. And you want to hang on to those things. You don't want to sell after that first double or triple, especially if it is that high quality business with that multi-bagger opportunity.
Very good. All right, Mathieu, close us out here. What was a Canadian investing opportunity that changed your life?
Yeah. Well, I'll speak for the Rivemont MicroCap Fund because it's a more recent success. So the fund has been launched about 3 years ago. And the biggest winner so far has been a company called Xebec Adsorption. It's a XBC on the TSX Venture. So we first bought the company in 2018. It was trading at about a 40 million market cap. The company did about 15 million in sales the previous year, and they had just won their largest contract in history. It was a $51 million contract, so more than triple their previous year's revenue in just one contract. And the stock didn't really move that much on the news, so I figured, this doesn't make any sense. I figured it was probably very undervalued, and so I did financial modeling. I spoke with management, I did industry research, and got enough conviction to buy a significant position in that one. So at the time, the stock was trading at about 70 cents, and they just ended up executing. So revenues this year will probably be above 70 million, and they're guiding for over 100 million next year. So very, very fast revenue growth. They've become profitable. And also, I built the conviction to really trust management. I think the CEO is one of the best microcap CEOs out there. Well, actually, it's not even a microcap anymore, but you know what I mean. So yeah, so we still own. Well, the fund still owns a position in Xebec, and now the market cap is over $1 billion, and the stock price is over $8. So it's been like a 12-bagger in less than 3 years. So that would be the biggest success for the fund.
Nice. Congrats on that, and congrats to all of you on on these successful stories, and garnering your entry to being on this panel today. I know when you first made those investments, you're like, oh, this is going to get me on Planet MicroCap, Canada Virtual Edition panel at some point. So congrats on all that. But, this actually all leads to my next question, because especially in the using the Expel experience and also CSU, the Constellation software experience, is that there's really that managing the fine line between holding and selling, which is really difficult. I mean, Jason spoke to this a little bit earlier as well. And, how would you say that you've maintained the conviction to hold or determine when the thesis is broken? So Meredith, I wanted to come to you on this one first, and then we'll get everybody's opinion.
Yeah, I think it's really, really important to understand the long-term prospects of the company. So many people just go quarter to quarter, and they sort of miss the end game. So what I often think of the end game, or how big can this company become? And to do that, you really have to do some very deep due diligence. So in Expel's case, talking to the installers, understanding the installer ecosystem and how Expel fits into the entire stack. So you have the manufacturer, then you have Expel as the marketing, branding, quasi-franchiser, and then you've got all the independent installers. So the installers could be mom and pop shops, or they can be the dealerships. And so understanding how they fit into the stack, understanding the global opportunity, because they started domestically in the US, and then they have a very, very high presence in Canada. And now they are going to Europe, they're going to China, they're going to eventually go to Japan, Korea. So Russia, Mexico. So understanding the global opportunity, I think, is really important. So you're not just looking quarter to quarter, which many people unfortunately do, but sort of that really helps with holding the stock, I think.
Very good. And then, Mathieu, want to come back? What are your thoughts on this?
Yeah. So I mentioned it a few times already, but management is so important to me that when I decide that I can trust someone, I just trust them. So until I'm proven wrong. So that helps to hold for the long term, even though sometimes things don't go as expected, or maybe the stock gets overvalued or undervalued, or things fluctuate. But in the end, if I trust the business plan and the management team to execute it, I tend to have a longer term horizon. But I still struggle with that. It's challenging when you're sitting on big gains, and it seems like the right thing to do is to take profits, but usually it's not the right thing to do, because winners keep on winning usually. And for the other part of the question of realizing when the thesis is broken, well, when I first invest in a company, I really try to set my expectations and know what has to go right for this investment to succeed. And I try to benchmark along the way if the execution goes according to my initial expectations, and I reassess. It's a very dynamic process, but in the end, I have to be honest with myself and know when something is not working according to plan, and then decide to move on.
Gotcha. And Dean, how do you think about this?
I think we're all long-term investors in 2020 when the share prices of our favorite companies are doubling and tripling inside of a year. I think the harder, so there's the holding, and maybe I would consider holding, or at least holding a core position. Maybe you're trimming as your exposure gets to a degree that's unrealistic, where you're not sleeping at night. The focus should be on the business and not the share price. So is the business growing, or are they becoming more entrenched in their current market? If that business is performing better, it's a lot easier to not look at the share price and worry about what can happen in the short term. Having said that, there are times where it makes sense to really maybe not completely liquidate a position, maybe take a significant amount of money off the table. As a private investor, I have no one to report my quarterly year-end statements to. They don't care if I've got a 5% position in Expel or a 35% position in Expel when it's trading at whatever times revenue. So you can use that as as an advantage. If the thesis is broken, so I'm going to use a company I do own shares in and I've held for a while. My original thesis for this company, Sangoma Technologies, was they were transforming themselves from a lumpy, slowly declining product business to a recurring software business. And they were going to do that with a mixture of in-house product development as well as some acquisitions. And so a core function of that thesis was the acquisitions. And so you have to give them a reasonable amount of time to execute. And if it was 2 years into the strategy and we had not seen any acquisitions or had not seen any ones that had moved the needle as far as getting the business to where it was going to be, that thesis would have been broken at that point. That's not what happened, but at that point that would have been broken, and he would have just sold the shares and moved on. Regardless of what the share price would have been or whatever, you're better off to just move on and find a different opportunity.
Very good. All right. So Jason, coming to you on this question, and because I want to even skip ahead a little bit, because the overlapping theme, it seems, amongst everybody before, and I'm sure you would agree here, is that, you have a stronger conviction to hold when you can determine that microcap investment, or any investment, but we're talking microcap. So that microcap investment may have a true competitive advantage. And you can actually point to that company and say, oh, you know what, this actually might be a great management team in place. So for you, how do you think about, holding and also being able to then sell when you see your thesis has been broken? And then we'll transition to those other points.
Yeah, I think, that fine line between holding and selling and determining, maintaining the conviction to hold is probably one of the hardest jobs for an investor, really, right? There are so many books and articles written about stock picking, but there are very few books written about holding skills, actually, right? So, it's one thing to think that the thesis is broken and you sell, but it's actually not, right? The solution is to recognize your mistake quickly. And one rule that I have is I force myself to follow the company for at least another quarter after selling. I think, too many investors drop a stock completely once they sell. And you won't recognize a selling error if you do that. Sometimes it's you bought for the right reason. You just had a temporary lapse of judgment and you're selling incorrectly. If you stop following it, you're not going to be able to correct your mistake. But I think that the more common mistake is when an investor knows a business is really good, the long-term prospects are strong, but still sells. And usually because there's a surprise weak quarter or because of valuation. And the selling decision actually is often made in a day or two, and the investor tries to get out as quickly as possible, right? So I find like long-term conviction holding requires slowing down selling. Sell 5% if you're worried and see how it feels the next day, right? If you sell 50% quickly, your brain is going to convince you that you made the right decision because everyone wants to seem logical and consistent to themselves, right? Separate the surprise element from the actual news or analysis that is driving you to sell. Now, of course, if you go slow, you can get hurt if the stock falls further and the right decision was to liquidate. But honestly, if you're a good stock picker, then the right decision is usually, and you're investing, let's say, in quality stocks, not net plays, right? Then the right decision is usually to hold some or all and wait out the temporary dip or valuation issue. Now, how have I been able to hold on to like XPEL, right? I mean, honestly, and this is going to sound ridiculous, but honestly, it's easier than you think, right? At the start of 2019, when XPEL was $6.20 US and roughly a 5-bagger, like my MasterCard, for example, was a 40-bagger at that time, right? So XPEL at the start of 2019, I held for 2 to 3 years, and most portfolio positions at the time I owned for longer than that, right? My habits are designed for long-term multi-baggers. So therefore, I was ready to benefit from that entire XPEL journey. It really comes down to your habits, right? If your habits and procedures are designed for swing trading, then it's going to be tough to hold on to these wonderful, unique opportunities for the long term. So, I was ready for XPEL because my habits were ready for XPEL when it comes down to it.
Very good. Well, and Jason, coming back to you as well, I mean, when you were first evaluating XPEL or any opportunities out there, how did you develop the skill to determine, whether, again, a microcap or any investment has that true competitive advantage? I mean, not every situation is going to be like XPEL where you could see, if they happen to win this lawsuit, there it is. Moat's there. It's a clear special situation, opportunity right there. But, not every situation has that opportunity, So
it's a bit of a trick question, Bobby, because, I don't know if any microcap, while they're a microcap, has a true competitive advantage.
So this is where I was getting to.
True-ish, advantage, right? Like a developing advantage, right? Because I'm a businessman, I'm always like shocked how at successful businesses, right? It's so hard to build a successful business. So you got to ask a lot of whys, right? Why are they growing so quickly? Why are they being successful, right? I mean, take XPEL again, right? They've been able to grow the top line so quickly for years with a bare minimum of marketing, right? When you see that occur, right, doesn't that make you curious, right? Or a few years ago, when you saw a company like XPEL grow so quickly without much debt or share secondaries, right? Even without much bottom line profits, right? Doesn't that suggest that value is being created, right? Even in this last quarter, right? XPEL grew its auto window tint business like 79% year over year, right? Why, right? You have to find the answers to these whys. And after all, like auto window tint, for example, has been around forever, right? XPEL has a good product with their auto window tint, but so do its competitors, which are already entrenched in car dealerships, right? And so answering these whys, is really crucial, right? And there are multiple reasons for XPEL's success, including some better software. But ultimately, like competitors are designed around like middlemen, distributor models, and XPEL is built around like a direct model, right? Car dealerships want to improve their margins, and so they need to implement good, better, best options for auto window tint, right? Or they want to explore going into PPF, right? And they get the service they need to succeed from XPEL, right? So, like asking management, and I think Meredith and I asked Ryan about this, like, why are they succeeding in auto window tint, right? And he told us like a competitor switched from this distributor model to direct, but it took him 10 years to do so because it's so tough and so involved, right? Having the better business model, having that direct distribution system when so many of your competitors are going through these middlemen distributors, that's a competitive advantage. And I think it comes back to distribution. So much success really comes from distribution advantages. And so, advantages do come in various shapes and sizes, but you got to use those qualitative clues to improve your quantitative models, and then your quantitative observations to improve your qualitative, understanding, right? It's a virtual circle, and hopefully the why then is followed by, I get it. So that to me is really, really, how you figure out some of these stocks. And maybe Meredith has some, or some other panelists have some thoughts on it too.
Anybody want to jump in?
Yeah, well, I mean, I agree with you, Jason, when you say that not a lot of microcaps have true moats or like very large competitive advantages, because they're just like startups, they're small businesses. They have small competitive advantages, but personally, what I look for is outside validation. So that's an important thing for me in microcaps. So for example, I spoke about Xebec earlier, that they got their large order, $50 million order from an important customer in Europe. And to me, that's validation that there's a real demand for the product. There's it's a large customer, and they chose Xebec. Why? Well, because probably the product is better than other competing products. So this is validation for me. Another thing is companies that get strategic investors involved. I'll give another example that the fund is a shareholder. It's Kraken Robotics, PNG on the TSX Venture. They have Ocean Infinity. It's a large strategic player in their industry, and they invested and bought I think it's 20% of the company. So to me, that's validation that the technology is real and somebody sees value in it. In other cases, can be for example, a company that wins a patent lawsuit. So they successfully defend their intellectual property, and they get paid an amount in the lawsuit. So that tells me there's value in the patents. So I'm looking for things like that to validate from an outside perspective my investment thesis.
Very good. Dean, Meredith, do you guys want to chime in here? Or Dean, sorry.
I don't think I have much to add other than for Jason mentioned following a company after you sell. One thing that I found that sort of worked to enforce or ensure that I'm doing like having one is a feedback loop is I have an investing journal. And so every time I move more than 1% of my portfolio, I write why I did what I'm doing, what made me come to that decision. And then so I can look back at that and say, like, what was that the right or wrong? And it sort of timestamps everything. And I will clearly write in there, do not fall in love with this business right now. Or as I'm purchasing shares, do not unload this if it doubles in a year, like something, reassess. I think when the share price is moving up, it creates a different dynamic. Some of the harder times are when the business is improving and the share price is going nowhere. And you're sort of questioning yourself, what is going on that is causing this? Jason mentioned Expel. Expel went nowhere for like a year and a half, which is essentially 3 lifetimes in 2020's like time frame for investors. I've had a few other companies where I've purchased them and the business has improved and it's meeting those deliverables, but the share price is doing nothing. And the conviction to continue to hold through that and add, maybe it's going up a little bit, but it's definitely not moving the needle like you sort of anticipated. I think those are really, that type of conviction is not, I don't think that's discussed enough. And again, in this year where everything is just supercharged, I don't think that many people actually put a lot of thought into that. And so, like Mathieu was saying, when Zebek had that large order and the share price, yes, it moved, but not to the degree. You're like, look, this is a very large order. This is a very validating data point to my thesis. And the share price moves 10% or something like that. And you're just like, so you do have to ask yourself, what is the reason for this? But as far as, I don't have anything other than that to add, but I do think it's underappreciated that when you have those stagnant times and the business is improving, that's another sort of hurdle to get over.
Yeah, no, absolutely. And coming back to you real quick, I mean, you know, one question that was actually written in before today's panel on Twitter was asking really about maintenance, you know, and this kind of goes back to that whole holding strategy and when you know to sell and when the thesis is broken, because, you know, what are some of the things that you all do to make sure that you have the questions in place for when certain things happen? Or, you know, do you have those maintenance questions ready to go before maybe something happens to validate them or invalidate them? You know, how do you think about when you want to hold something for the long term? That's why you invested in it to begin with. But then now you have to ask yourself, okay, well, at what point is it invalidated? You know, Dean, love to get your thoughts on this.
So the question around sort of maintenance time or you know, continuing to validate your thesis, there's sort of the shorter term quarter to quarter swing. So maybe you see a jump in revenue or receivables or something. So there's always those typical accounting questions. And then there's definitely you need to, you know, is this management team doing what they said they were going to do? So COVID has thrown a wrench into all sorts of plans as far as expansion for many of the businesses that I own. But, you know, are they still moving towards what their 3 and 5 year strategy is? And if that's the types of questions you're asking when you're getting into the business, you know, what can this business be in 3 or 5 or 10 years or whatever that is? Those are really just, you kind of just validate those same data points as you continue to own shares. So if the goal was to fill a hole in their product portfolio, you know, whether that's building it in-house with their engineering team, or that is purchasing a company out on you know, on the open market or potentially private, that's, you know, you have to ask, like, where are we at with that? How is that going? What does the pipeline look like? It's not a lot different, because the money and the share price doesn't care what you paid for it. The business doesn't care whether you bought it at $1 and it's at 3 or it's at 50 cents. It doesn't really matter once you've made that initial purchase. So you still need to definitely continue, and you have to make sure that that opportunity is still there. If you're going to hold these things and they're going to become a large portion of your portfolio, as the business changes, the questions do change, and it pivots maybe from a statistically cheap to what is that 3 and 5 year opportunity. So I'm just going to use Expel as an example, because Expel ran into a product quality issue shortly after the lawsuit, which I remember we were all debating whether or not they would hit like 15% EBITDA margins. I think that was 2017 or 2018. And the questions you're asking right then are like, will this business, you know, has this impacted the long-term potential of this business? Forgetting the short-term profitability, but like, has this impacted the long-term potential of this business? On the other side of the quality issue, as they're expanding into different geographies, it's, what is the strategy in Mexico? What is the strategy in China? Why are you choosing this? And so it is really dynamic, but if you see the potential, you're just sort of verifying and validating that initial thesis as you go along.
Very good. Jason, how do you think about this question?
Yeah, it's. I mean, I think one of the advantages of being like a family office or a private investor is that you can really design like bespoke processes, right? You're not fitting yourself into a large mutual fund organization, and you're a lower level portfolio manager, and you have to, create some kind of model. I was speaking with a portfolio manager not too long ago who was asking me some questions about Expel, and she was looking at it, or he was looking at it about maybe about 18 months ago, and then like it fell through the cracks, right? Fell through the cracks, right? So one of the advantages of being a private investor is that you can really, if you're interested in a particular stock, you can drive down and study that stock, morning, noon, and night, if your family allows you, right? And so, I think basically I really don't have too much to add on to what Dean said, to be honest with you. With like maintenance due diligence, it's really about asking the kinds of questions that keep you interested and invested in the stock, that you can see this growing platform, this growing sales funnel, down the line, right? So like Meredith suggested, so many investors just focus on the next quarter or 2 quarters. They ask you like, what's your estimate for next quarter? What's your estimate for next year? But honestly, like so much of the value, if you look at the value of the stock, is like in the terminal value, right? So you got to feel comfortable that that's like a large and growing number. And so many of my questions are really trying to figure out, what's going to happen in the next 3 or 5 years, or even 7 years. And even the management team doesn't know that, right? But you're just trying to get a sense of how aggressive and how, what are the real opportunities out there. And I'm sorry I'm not being more specific, but it's really, that's really comes down to it. Just trying to get a sense, even before you can put the numbers down, like a sense of what the real opportunities are out there.
Very good. All right. So Mathieu, I'm going to move on to the next question because look, I've taken up a lot of your time, and also our audience, like, wow, we're digging in here. So I got 2 more questions that I wanted to dig into real quick, and this one has to do with, everyone can point to great management after a stock has gone up a lot, right? So early on, how have you guys been able to determine whether a management team is strong or weak? So Mathieu, I'd love to get your thoughts here.
Yeah, sure. So, there are a few hints that you can find when you talk to management. So, the first one is they think and talk about the long term. So they won't be talking about next quarter's results or which news will be released next week. Like they think in 3 to 5 year horizons, and also they talk more about the business than the stock price. When the management team talks about the stock price, the first thing during the meeting, I lose interest right away. And also one thing I look for is the previous track record. So it can be with the current business. If they have enough history, I can look back a few years and see how they have executed so far. But sometimes it's not possible, so I look for maybe previous business experience in other companies. So that can tell me that someone has done it before. And then I always try to ask about capital allocation, how they think about financing the business and investing that capital. What are the main opportunities? How they see things growing for the long term. So that would be my process.
Very good. Jason, your thoughts on this? Oh, you're muted.
Well, there you go. Sorry about that. A lot of shareholders want like skin in the game and view management share ownership as a proxy for like good or aligned management. And I'm not actually so sure about that. And I know that's sort of controversial. Like, to me, like a lot of microcap like management ownership is correlated with early rather than excellent. And I think the key word is team. A growing microcap business is going to hire more employees. Not all of them, or even many of them, are going to be owners, but all of them really need to be good at their respective jobs. And it's so tough. Admittedly, it is tough to or impossible sometimes to get a feel for the quality of new employees. So therefore, you can't really get a feel for the culture. But a lot of times you can talk to, the CEO and the CFO, or the CEO and the COO, right? If the CEO surrounds himself or herself with like unimpressive or weak CFOs or other seconds in command, then what does that really say about like the CEO's standards, right? To me, it's so crucial to be impressed by more than just a single charismatic leader in a MicroCap, right? You got to see at least some other high quality employees, because that's what they're going to need, a great team really to propel themselves forward, for these small microcap growth stocks.
Very good. And Dean, your final thoughts on this?
I think the biggest points have been kind of brought up. I think one thing that I didn't appreciate, and I've learned as I've evolved, is that the better CEOs are spending more time with their sales teams, their employees, their suppliers, their customers, and understanding their product or service from the end user experience, where they're strong and where they're weak, the competitive landscape, rather than just sort of giving a nobody retail investor a bunch of their time that may or may not, be in this thing for the long term. So and to really echo what Jason said, like to find a CEO and a CFO team that two people are kind of rowing in the same direction at the same cadence is very rare. I've only really found 2 or 3 through my experience so far.
All right, very good. Well, we're at our final question of this panel. And I just want to say thank you all for just everything that you've provided today. There's been so many great pieces of wisdom and insights that I think anybody listening in can really take away here. So, my final question is, and Meredith, coming to you first on this one. If you had to offer a suggestion to your fellow Canadian microcap investor, what would it be?
I would say to really filter ideas that you're going to take a deep look at very narrowly. So, and if once you select a stock that you really want to investigate, let it play to your strengths. So let it be something you're interested in, so that you can read broadly on it, read trade journals, go to conferences, talk to suppliers and customers. And so if you don't want to do that, that's very difficult to get into the sector and understand the space and the competitive landscape. So I say choose companies very narrowly that fit within your circle of confidence, and you'll really, get a really good sense of that company, and, make sure you can talk to management, and like, don't waste time and effort on story stocks that you're never going to invest in, because it's just a waste of your time. I mean, sometimes it's interesting just to see and study other companies to get that pattern recognition in place. But for the ones that you're going to really want to invest your time and money in, just really make sure that it's something that you're very interested in, and you think that all the stakeholders might benefit from that product or service, because in that case, it's really a virtuous cycle. So if it's a surgical product that is a unmet medical need, and you can, the patients benefit, the doctors benefit, the payers benefit, and then the business benefits, and you as a shareholder will benefit. So if you can find those really special companies, I say, put a lot of effort into it and understand it better than anybody.
I mean, that's if there's anything anybody heard today, like that is probably, look, life is short, and especially in investing, spend your time wisely. I mean, exactly. but another good point that you said there too is like, it's good to look at everything just to get that pattern recognition down, so you know what to just, all right, this pile right here, crap, and then the real stuff. So
of course you miss things that way, but you are going to miss things that way. So if there's a SaaS company that somebody's really excited about, you listen to the pitch, especially if it's a good friend who knows what he's talking about. You listen to the pitch and you say, that is probably going to do well, but your time is limited. So if it doesn't interest you, or if it's just beyond what you understand, then I put, keep it on a watch list perhaps.
Yeah.
But you only have so much time.
And also be totally cool with that idea that you spent, 100 hours researching, that it might not be a good idea, but
Right.
at least.
And that's valuable because you went down the rabbit hole and you didn't invest, and it could be the wrong decision, but it was your decision. So it was time wise, used wisely, I think.
Very cool. All right, Dean, what about you? How would you answer this question?
So I would say, leverage your resources, which to me for microcap investing is like build your network, cultivate a good network. My best idea funnel is other investors. Often I'm punching above my weight class when it comes to business analysis. Where I can do well is in a conviction to continue to hold through sort of rough patches. So cultivate your network early. Make sure you're giving to the community. So, we've mentioned Expel once or twice here today. My contribution was minimal, but I contributed what I could. I was another data point on the board, kind of validating the thesis. So give back, and then, that network will be, for me anyways, it's been my best idea funnel. And if I ever run out of ideas, I can always message someone on Twitter or pick up the phone and be like, all right, what are some things that you're looking at and why you're looking at them? And even if I don't end up purchasing shares, it does create more ideas for the funnel to research.
Very cool. And Dean, I got to ask, are you shareholder in Expel?
I am, yeah.
Very good. Yeah, no, that point about hitting above your weight class, I feel like that anytime I press record, that pretty much is what's happening, so I can definitely appreciate that, especially on this panel today. This is far beyond my weight class. But so Mathieu, how would you also answer this question?
Yeah, well, my advice would be to be patient and invest with a long-term mindset. I have many friends who invest in microcaps, and a lot of them are chasing quick gains and investing in companies they don't really understand or haven't researched properly. So I think, like in a market like we are now, where everything is going up, this works, and that's the trap, I think. Because I don't feel like it's a great strategy over the long term. So I would say do your research, do the work, and find great businesses, find a few of them and hold them for the long term.
Very good. Jason, close us out, man.
Yeah, these are all great suggestions, and I really appreciate being invited on this panel. So thank you, Bobby. And I got three more suggestions. Like, number one, even though these are microcaps, you want execution, not excuses, right? Excuses is polite Canadian for an upcoming share secondary, okay? So watch out, okay? Number two, don't auto sell performing microcaps just because they 10 bag. Like, I bought Expel at 10 times the price a fellow like investor acquaintance paid, and now it's like 40 times higher than my price. So don't just focus on how much it's appreciated, right? Focus on the opportunity going ahead. And number three, great microcaps are like Forrest Gump. They just keep on running. So there you go, Bobby. That's all I got for you.
Great microcaps are like Forrest Gump. I should rename the name of the title of this panel to that, because that is a gem unto itself. But all right, well, again, thank y'all for doing this. Let's close this out where everybody can go and follow you on Twitter and or your blog. So Mathieu, what's your handle and website for people to find more information?
Yeah, sure. So Twitter is ESPACEMC. And the website, the blog is espacemc.com. And if you want to find out more about the Rivemont Microcap Fund, you can visit Rivemont's website. It's RIVEMONT.ca.
Very good. Jason, how about you?
Yeah, you can find me on Twitter as 8track180. That's EIGHT, track 180. And on Microcap Club, I'm just 8track. And also, you can just, if you want to find out a little more about Hudson 215 Capital, it's just hudson215capital.com.
And that's Hudson 215 Capital, not Hudson 215 Capital. Just want to make sure we're clear. 250, yeah, whatever. For you, Bobby, you can say the 215 if you want to. You know what? I probably will end up. That's very good. All right. So, Dean, where can people go and follow you?
So you can follow my personal blog at pettycash.blog. I'm also on Twitter at pettycash, and in between petty and cash is 2 underscores. So hopefully that you can find me between there, as just one word petty cash was already taken. So all
right, so we should another thing we're going to do is crowdfund to buy at petty cash just for you.
Sure.
So you don't have 2 underscores anymore.
If you go to pettycash.blog, you can find me there quite easy, and you can message me through the blog as well.
Very good. Thank you, Dean. And Meredith, where can people go and follow you on Twitter?
So I post on Twitter at Lock, Stock, Barrel, no E, because it was already taken. And then I also post on the MicroCap Club under Lock, Stock, Barrel with an E, because it was not taken there.
And I think I asked you this on our independent podcast, is Lock, Stock, Barrel, because what's the name of the movie? Is Lock, Stock, Barrel and 2 Smoking, 3 Smoking? It's
it actually wasn't from that movie. When I originally went on Twitter, my daughter had the brilliant idea to put Stalker Mom and see if that was taken, but it was taken by a woman who doesn't even talk about stocks. So then I needed something with stock in it, and Lock, Stock, Barrel seemed to be just a cool name. And it's kind of macho, which is kind of funny. Yeah,
it's hilarious. I was just going to say, it's very funny because you're so chill and relaxed. And it's like, Lock, Stock, Barrel, like, here we go. But well, with that, I really appreciate all of you for taking the time to do this today. Look forward to our next chat, and stay safe. Happy New Year. We're recording this just before the New Year, so Happy New Year. And I look forward to our next time we get to chat. So thank you.
Thank you, Bobby.
Thank you,
Bobby.
Thank you.